We are back. Another episode of Real Estate Stories. Today, you guys are going to learn real quick, why does it matter that there are different types of appraisals for different types of mortgages, specifically conventional, FHA, VA, being the most popular types in this area. Hey, everybody. Michelle Cohan is joining us once again today.
Hello.
I'm Robert. Hey, Michelle, thank you for coming. I'm Robert Greenblatt. And we're going to talk a few minutes today and kind of just try to educate you guys a little bit because appraisals more than ever mean something, but in some cases don't mean anything at all. It's kind of a really strange market.
That's crazy.
Yeah, it is a little crazy. So Michelle and I were chatting about this recently and said, well, let's jump on and do a quick video about this. So if you're an agent watching this, if you're a buyer or a seller watching this, there's a really good chance that the word appraisal came up somewhere in your conversations. If you're buying or selling as an agent, it's probably coming up every freaking day.
Every day.
Yeah. So Michelle had an experience recently, of course, because it seems to happen like every week in some transaction our team's involved in. The conversation comes up and sometimes there's a challenge. So Michelle had an issue recently with a conventional appraisal. Right. Want to share that, Michelle?
Sure. Yeah, this was a conventional appraisal. My client and I had been looking for months and months and months, was really excited that he got this particular townhouse. So everything was going along. Everything was great. Like Robert was saying, it was a conventional loan, and we were good that it was conventional because this particular area didn't take FHA. So we had to get him conventional. Of course, any kind of offer that I put in, I do put somewhat of an appraisal gap in there. So just in case. But when the appraiser, who was an out-of-town appraiser, came back and appraised this, it was approximately $20,000 less than what it sold for. Now, my buyer had already put up a good amount of money for this, but not enough for this gap to really make sense. I mean, $20,000 is a lot of money for a gap.
In a price range of approximately how much?
142. So it wasn't like a huge amount of money.
Yeah.
You know? So at that point, we had spoken to the seller. This seller just said, forget it. I'm going to take it off the market. Then with other conversations within the listing agent, they said, you know what, we'll come halfway with you. But again, my client already put down a lot of money. If it's going to be that much of a gap there, it would be hard to resell. So he said, breaks.
Yeah.
So unfortunately, we had to get out of that one.
And we do see that a lot. So Michelle had mentioned real quick that this neighborhood, they had to have a conventional appraisal. So that's another piece of the industry, right? So if it's in a planned neighborhood, some neighborhoods allow conventional appraisals, some allow VA appraisals. I mean, some allow FHA appraisals, some allow VA appraisals, and some don't. It just depends on the neighborhood. In fact, depending on the neighborhood, especially some condo neighborhoods, if their finances are not in order, they may not allow any financing at all. So that's a whole separate conversation. And then if you get super creative, I sold one recently in a neighborhood which did not allow any traditional financing at all. And this buyer actually had to go with a very non-traditional type of loan product from a local bank. But so here's a real important thing for you guys to understand about appraisals. So in our service area, the most common are conventional, FHA, and VA. Mm-hmm. They're all basically just appraisals. The differences are, though, that VA and FHA have stricter criteria and guidelines as far as condition goes. One of the biggest misconceptions, though, especially with VA, is that the VA appraisal is an inspection. You hear that term a lot. Hey, a VA inspection, a VA inspection. Well, it's really just an appraiser who is certified to do VA appraisals. They are not home inspectors, so please don't get those two confused. They are very different. An appraiser is in and out of a house, right, in 20 minutes, Michelle, right?
If that.
Yeah. Home inspector, same house, 2 hours, 3 hours, right? Yeah. So very, very different, very, very different. A very important thing, especially in this market, is there are, I kind of look at, I've been using this term for a long time. I look at VA appraisals, Michelle, and FHA appraisals like milk. Milk. I don't even drink regular milk.
1%, 2%.
Well, I drink almond milk, but but meaning that they have a shelf life and they expire at a certain point. So what happens is if you're in a transaction right now and there's an FHA buyer or buyer using FHA financing on the property, and let's just say it's a $100,000 contract and it appraises for $90,000, and the buyer can't bring the extra funds to the table, or the seller's not willing to budge on price, they just can't get together on it, and the deal just goes kaput, unfortunately. If another FHA buyer comes along on that same house within 120 days, it's the same appraisal. Right. It's the same value, with the exception that technically you can challenge it if you can argue that the market is moving quickly and they might release it and let an update be done. But even in this market, challenging to do. Appraisers typically can be very conservative in that regard. So especially if it's off by like 10% in that example.
If I can just interject with you talking about challenging it, with the example that I gave earlier, I did challenge this because of the size of this particular development and the difference in, I should say, updates and how one looked compared to another. I challenged it because this one was like prime. It was like an excellent condition versus some of the ones that they gave for the appraisal. But unfortunately, because it was so big, they wouldn't allow this challenge.
Yeah. So it's a huge neighborhood. I'm very, very familiar with that neighborhood. And there's a wide range of conditions in that neighborhood. I don't know, there's hundreds of units, I think, in that neighborhood. Yeah. And they do vary. For years, that neighborhood has had wildly varying conditions of the properties. So you have to live with an FHA appraisal. You have to live with that number for 120 days. So then if that deal falls apart, that example with a $100,000 contract and a $90,000 appraisal, they can't move forward with another FHA buyer in that scenario. Similarly, VA, we work with lots of veterans on our team, a lot of veterans, actually, and a lot of active military families. Similar situation, except the VA appraisal is actually good for 6 months. So these are things that both buyers and sellers have to be aware of, especially in this market, because the numbers are changing. Sometimes you can challenge them. But in my experience, it's really, really rare. And there's processes to this. There's something called Tidewater for VA and similar processes for FHA and conventional. But it's very, very rare that an appraiser will admit or make a change because they're usually pretty thorough and they'll stick by their numbers. I had one, I was just telling Michelle before we went on here, I had one, I guess about a year or so ago, very local, big, beautiful neighborhood, plenty of homes. I think it sold, I think the contract was roughly around $450 on this particular house. Buyer was using conventional financing. Now, conventional financing doesn't stick to the property. So in this scenario, I was helping the seller, buyer gets the appraisal done. It was about a $450 sale price, comes back at about $400. And the seller's like, no. And the buyer was like, yeah, I understand. And the buyer was able to kick in a little bit more money to make up some of that difference, but not that much of a difference, nor was the seller willing to reduce the price by that difference. And that's a key point too here, guys. I've had sellers ask me this. In the event that a property is under contract and the appraisal comes in lower than the contract price, as a seller, you are not obligated to sell the property for that lower price. But at the same time, in most cases, the buyer is not obligated to somehow magically make up the difference between the appraised value and the contract price. Long story short, on that other deal, the buyer wanted that house so badly, they went to a second mortgage company, got another appraisal done by this other mortgage company, and it came in over the over the contract price, if you can believe it. So there is some extreme subjectivity here in some neighborhoods. And You just never know how it's going to play out. The other thing that's going on a lot in this market, Michelle does this a lot, or coaches her clients through this a lot, is waiving appraisal gaps, or waiving appraisal gaps up to a certain dollar amount.
Yeah, a certain dollar amount.
Because it's so competitive. So give us an example, Michelle, of a conversation you might have with a buyer who's getting ready to make an offer on a property.
Sure. I call them shiny pennies. These are things that I want them to stand out. You know, my offer stand out versus another agent's. So to me, the appraisal gap is one of them. And again, it depends on how much the house is. Now, I try and do my homework prior to that and do comps for the area to see how much houses are going for that particular development or property. So I'm not really telling my clients above and beyond. And just a quick one for this house that just went under, that we're going to settlement with, we're going to closing for. It was 605, what we went up to, and we went $25,000
over the asking price.
Over the asking price. The appraisal came in at 615, and yet I still had an appraisal gap of that of $7,000. So again, say again.
So what you're saying then, just to like be super clear, is that buyer that you were working with said, I know that I'm offering $25,000 over the asking price. In the event that this property appraises for less than our contract, so for less than 605, I will cover up to $7,000 of
in addition,
a difference. In addition to, obviously, I had offered 25 grand over the asking price. Right. So we do see a lot of that. One thing I don't like that I do see sometimes on the listing side of this, and then I have conversations with buyers agents, is because this market right now, as we make this video, is so competitive, this appraisal gap piece of it is one of your shiny pennies. It is one of those things that people try to put in there because they know that the market, the appraisers are still catching up to the market in the last 18 months, almost 2 years. Sometimes people will imply or try to just blindly waive it. They'll basically say, I don't care what it appraises at, I'm buying the house. Just had a client conversation. No, I had a conversation with a buyer's agent about that. So I forget the exact numbers, but let's just say it was $375 was the offer price. So I said to him, well, what if you get just a really bad appraisal, a really bad one, and it appraises at $325? Is that buyer going to make up $50,000? And he's like, yeah, that's a good point, you know, because it doesn't happen a lot, but you got to be careful, and you don't want any more stress later in the transaction than necessary. There's always some, but you want to try to avoid that at the onset if we were to move forward with that offer. So we always coach our clients and talk on our team about, hey, if you want to waive an appraisal gap, do it like Michelle structured hers, which is, what's the dollar amount that you're comfortable with as a buyer? How much of a spread are you willing to make up that difference? If you're going to live there 20 or 30 years, you're not going to get caught up on every dollar if it's the right house for you for many, many years. But you also, you know, we don't have unlimited supplies of cash, right? I mean, I wish we all did, but we don't, right? So that's another piece where you go, okay, that's a shiny penny, but that shiny penny has to kind of fit in the frame, right? It's kind of like you have to package that shiny penny a certain way, right?
I mean, your offer is your offer, but you have to make the best you can. And the appraisal gap is one of those big ones that sellers are looking for.
Yeah. And unfortunately, and I was just reading this on one of the forums this morning, unfortunately, it can be challenging in certain markets and certain price points right now when you have 10, 15, 20 offers on a property, which is still happening in some areas on some homes. Some sellers will have a whole bunch of offers in front of them, and they'll prefer a conventional mortgage over VA or FHA just because of there are somewhat less restrictions in some ways in the appraisal process. And there's truth. There's a lot of misconception about that. It's so interesting because one of our clients, a lot of our clients are veterans, as I had mentioned. I have this active duty family we're selling a home for, and we got, no joke, 25 offers on their property. and I spreadsheeted all the offers for them because you just can't make sense out of everything if you have them all laid out in front of you. So I spreadsheeted it, and of those 25, probably 60% of them were FHA, a whole bunch of conventional, and there was one VA.
Wow.
Remember, the seller is active and has a VA loan. So the first thing he said to me when we started chatting about the offers was, oh, that he wanted to take the VA offer just as a courtesy. But the way the numbers were and the way the offer was structured, and it was a highest and best scenario, unfortunately, in that situation, it wasn't even close. But over the years, I have had that happen. So if you are an active duty person, or you are a veteran, or regardless, if you're using a VA loan, and you potentially are getting frustrated because you feel like you've made a lot of offers and they're not getting accepted, if we nail down a house that happens to be owned by a member of the family, so to speak,
they're passing it on.
You got a really good chance. It's not a guarantee, but you got a really good chance. I had that happen many years ago. I literally, last story, and then we're going to break. I had a deal many years ago in a more balanced market, but it was multiple offers, and we made an offer. The seller accepted our offer. I was helping a veteran. Oh, actually, veteran. No, active. Constantly traveling all over the place, but was buying a house here. And we move forward through the process, normal transaction, everything's cool. We're at the closing table and everybody's signing their papers. And it's not a whole lot for us to do as agents at the closing table, by the way. Our job is to get you there and then back off and let everyone else take over. So I was sitting right across from the seller who I had never met. So we're making small talk. And I said, you know what? I got a question for you. And he said, what's up? I said, well, you got a lot of offers on your property. That's what I heard. Why Will? Why'd you accept Will's offer? And he said, you know, they were all very similar, the offers, but I saw that Will was using a VA loan. He's actually in the Marines. He said, this is an older guy. He goes, I served and I just wanted to pass it along as a courtesy. Yeah, and I was like, that's awesome to hear. That's awesome. Yeah. So the other piece, obviously, when making an offer is we try to personalize it a little bit when it makes sense. And sometimes it's that little bit of personalization that's that extra little hook that helps the seller kind of go in our direction for that buyer. So there's so much. We could spend hours talking about appraisals, VA loans, FHA, conventional, all that fun stuff. But we just wanted to jump on here real quick today, guys, and share this with you. Once again, another episode of Real Estate Stories. If you guys want to hear more, if you want to learn more about EXP and why it works so well, feel free to hit us up. Phone number should be down there. And again, Michelle Cohan, Robert Greenblatt, thanks for joining us today.
Thank you.
See you guys.
Bye.